Good morning and welcome to Market Opening on our collab show between Business Today and India Today TV. It's 9 a.m. and we're here to get you all the opening action. Let's take a look at what's hot in the corporate and financial world this morning. Indigo's stock price continues to be in the eye of the storm as the government mulls giving 5% of its flights to other airlines. Indigo has said it's not yet been able to identify the reasons of its operational breakdown, wants up to a fortnight to undertake a full root cause analysis. Meanwhile, there are reports that loco pilots of Indian Railways are also seeking duty hour limits. Even as Indigo rushes to get its staffing act together, Air India complicates matters by announcing a recruitment drive for Airbus 320 pilots, the same category Indigo is short of. Air India move will intensify the talent crunch with both airlines operating large A320 fleets, but it is party time for qualified pilots. U.S. trade delegation led by Deputy Trade Representative Rick Switzer and Brandon Lynch set to arrive in Delhi for talks beginning tomorrow. Indian delegation to be led by Commerce Secretary Rajesh Agrawal. Donald Trump, meanwhile, hints at tariffs on Indian rice after a roundtable with representatives of the U.S. agri sector. It's a boardroom battle with nail-biting twists and turns of a Hollywood blockbuster. Paramount Studios nixes the Netflix Warner Brothers deal in the last stretch with its own $108 billion offer. The plot involves everyone from Donald Trump to high-powered studio unions and prominent American investors. U.S. markets slip into the red, Dow down nearly 0.5%, Nasdaq and S&P follow. Futures steady even as Nvidia jumps on Trump's approval for H200 chip sales to China. Asia-Pacific markets mirror Wall Street losses as the Fed's two-day FOMC meet begins. Donald Trump has hinted at more tariffs against India in a roundtable meet with American agriculturalists and farm lobbyists. The U.S. president announced a $12 billion aid package for farmers and addressed allegations that rice was being dumped into the U.S. and into Puerto Rico from India, China and Thailand. The development comes even as a high-level U.S. delegation arrives in India today for the next round of trade talks.
And we do believe that countries are dumping rice into this country today. We've never seen imports this great.
Which countries?
India, Thailand, even China into Puerto Rico. Puerto Rico used to be one of the largest markets for U.S. rice. We haven't shipped rice into Puerto Rico in years. So this has been happening for years. This didn't start during your administration, but unfortunately, we're seeing it in a much bigger way now. The tariffs are working, but we need to double down because
you want more. I mean,
well, they're cheating, right? They're they're just subsidizing and then
India. Tell me about India. Why is India allowed to do that? They have to pay tariffs. Do they have an exemption on rice?
No, sir. We're still working on their trade deal. So
yeah, but they should be dumping. I mean, I heard that from others. So you can't do that.
There's a WTO case against India
now.
Give
me the countries, if you could. Go ahead. India. Who else?
So India.
Mark it down. Which is good?
Yes, sir.
India, Thailand, China into Puerto Rico, not into the continental U.S., but into Puerto Rico. Those are the main culprits.
So Puerto Rico used to do a lot of business, and now you
100% Puerto Rico was U.S. based.
All right.
And
so easy to settle. Okay.
But there's others too, and I can get you a full list.
Give me a full list. Yeah.
Of course I can.
Yeah.
In yet another push towards the India-US bilateral engagement, the new US Deputy Ambassador for Trade, Rick Switzer, will be visiting India on the 10th and 11th of December. Ministry of External Affairs spokesperson confirmed yesterday of the same. The MEA spokesperson also says that this visit is a familiarization visit as well as to meet with senior officials in the government of India. Listen in.
अमेरिका से एक व्यापार दल जो उनके यहाँ के जो डेप्यूटी ट्रेड रिप्रेजेंटेटिव हैं, यूएस ट्रेड रिप्रेजेंटेटिव एम्बेसडर रिक स्वाइट्जर, ये दिल्ली आएंगे 10 और 11 तारीख को। इनकी यहाँ ये यात्रा जो है एक तरीके से एक फैमिलियराइजेशन विजिट है और साथ ही साथ जो आला अफसर है भारत सरकार में उनसे मिलेंगे। जैसा कि आपको ज्ञात है कि दोनों देशों के बीच में एंगेजमेंट चल रहा है कि बायलैटरल ट्रेड अग्रीमेंट जो है उसको कंक्लूड किया जाए, उसकी समाप्त किया जाए और उसको आगे ले जाया जाए.
All right, Karishma Asudani joining us on the same. Karishma, we've been waiting to see some kind of closure on the trade deal, and if anything, further, tremors with Trump's latest attack when it comes to rice imports. With the visiting delegation, can we hope for some kind of conclusion on the trade deal?
Abha, I think hope is the only thing here that both the governments are also hoping on. But Donald Trump's comments on rice imports coming in at a crucial, India's imports from India coming in at a crucial time like this, when both the delegations are going to meet in New Delhi, especially the chief negotiators, that is Brendan Lynch and India's Darpan Jain, does not give a good signal, because looks like the US is again hinting on the fact that they are not willing to budge on agri imports, which means that this could be a talking point in this meeting, while this is not another round of negotiation and more of a visit to familiarize the officials from Washington about what the first tranche of the deal could look like. India's Trade Secretary Rajesh Agarwal had already hinted in bold, clear letters that they're looking to at least finalize a part of the deal before the year end. But to be able to have a fair, balanced deal, especially on the fact that agriculture has remained a sticking point for us, due to which, in fact, the deal was not concluded despite the fact that we had a first mover advantage, is something to look out to. So tomorrow and day after hold really key importance when it comes to these decisions.
All right, Karishma, we'll leave it there, and we'll, of course, track the outcome of that meet and that delegation visit during the week. Now, we're also joined by Shailendra Bhatnagar, Chief Analyst and Editor Markets, and Ramesh Kant, Head of Equity Research, Chola Securities. We'll come to both you gentlemen in just a minute. We are counting down to market openings, so just take a look at the index and the setup overnight. A little bit tepid when it comes to global markets. This morning, again, we're looking a little weak, and remember, we cracked that 26,000 mark in trade yesterday. Opening bell now on your screens. Let's take a look at those opening ticks and see where we're landing this Tuesday morning. Just down about 0.4% right now, so continuing to trend a little weaker. 25873 on opening this Tuesday. The Nifty Bank is down about 0.5%, so definitely some steady pressure building there. Let's pull up some of the other indices and the gainers and losers for you on the index. 0.5% down on the Nifty IT index as well this morning. So both banks and IT exerting some pressure. On the upside, very, very marginal gains. Advanced decline ratio, I'm sure, is tilted far towards a decline this morning. So let's pull up some of those losers for you and take a look at really where the pressure is coming from. Clearly banks, clearly IT. Let's also pull up whether or not that's contributing today. Trend, Maruti, HDFC, all down about 0.8% to 1%. So auto also not participating this morning. Tech Mahindra, ICICI Bank, BEL, some of the other names on the downside. Let's also pull up some of the news makers as we continue to, of course, show you some of the nifty losers. Let's pull up Indigo just to see how it's continuing to track post all of the negative headwind that it's received over the last week or so. Let's pull up Indigo today, just about flat after the recent hammering, and we'll keep an eye on that one because DGCA is, of course, talking about all kinds of penalties against Indigo. Let's pull up Physicswala as well. First set of earnings and net profit actually up 62%. So I just want to pull up that recent listing and see whether or not it's moving today. Yes, 5% there. Siemens has approved a 2,200 crore slump sale of low voltage motors business to Innomotics India. Let's pull up Siemens on the back of that deal, down about 0.5% today. So not reacting in any runaway fashion. Meanwhile, M&M, recent sales figures, let's pull up M&M as well, see if there's any action there. But overall, the market seems to be quiet, so it doesn't look like we're seeing too much of a reaction across the board. But definitely on something like a Physicswala, few other select earnings of Fujiyama Power Systems, and we'll pull that up for you because profits up almost 100% on that one from the broader markets. So clearly that's really maybe the only trigger that the market's responding to currently. Everything else is pretty much quiet and profit booking coming in across the board. Shail, good morning.
A very good morning to you, Abha. A very crucial level, 25,840, 850 is being tested on the Nifty. weakness. Today is the weekly expiry of the index, already down 124, 300 points down on the Bank Nifty, 300 points down on the IT index, and a very, very painful advanced decline, 1:2, 750 stocks in the green, 1600 stocks in the red. It's not looking good. It's a painful, difficult time for both the Nifty and the Bank Nifty. Weakness all around, especially in the mid cap and the small cap space. Very, very heavy delivery based selling happening on all F&O stocks, in particular in the mid cap and the small cap space. Abha.
All right, Dharmesh Kant also with us. Dharmesh, good morning. What's your view on the setup? It's looking weak. Are we going to see further selling from here on? What are you making of these levels in the market action currently?
Yeah, good morning, Abha. I think the line was very scratchy. I could not make out exactly what you were asking. But I mean, having regard to the markets, I would like to highlight that so there are periods of market exuberance, where that is the valuation exuberance happens. So we have seen this before from 2003 to 2007 levels when, in spite of, modest kind of earnings growth, the valuation multiples went very high. And then the resetting happens when earnings will catch up with the valuation multiples. Same type of market we are right now in, where, all the places where last 3 years from 21 to 24, irrational exuberance was there on the valuation multiples. Stocks were doing well. I mean, there's no problem on the company's fundamentals and earnings or the profitability. They are coming, but they are coming at their, natural rate of 12-15% kind of a growth rate. But the valuations given to them is 70, 80, 90, 100 PE multiple. And every day since the stocks were moving up, you have no choice but, celebrate that and say, oh, wow, it's moving up this way. Now this resetting is happening. I think this pain is likely to continue for some more time. And you have to be very choosy and value picker kind of a thing in this place, in this market, and you have to be patient. Constructively, on the fundamentals, I don't think there is any problem. There is no, news flow which is triggering this kind of a sell-off. It's more of a, right valuation resetting, which was to happen, but now I think it's more obvious after 15 months of pain. And again, the selling is happening. So be selective in the stocks where you are focusing on. I still think BFSI, defense, select railway infra stocks, metals, they offer a good opportunity apart from, select mid and small cap stocks.
All right, let's pull up a few brokerage views as well. We've got Kotak Institutional Equities on banks saying that housing loan growth is weak, public banks outpacing private banks, demand is stronger in large ticket loans while overall growth remains sluggish. Disbursements are improving, but high repayments and balance transfers are limiting net growth. So clearly they're saying some amount of weakness there. Actually, it's a very mixed view on banks, contrary to some of the other recent reports. Citi on insurance is saying ICICI Lombard continues to disappoint. Weak growth trends. They're looking more at new age players like ACO, and they are saying the PB FinTech stands to benefit from strength in retail, health and digital distribution. Talking about insurance, we've got numbers in also from Bajaj General Insurance, Bajaj Life Insurance, and those seem to be pretty much intact right now. So steady on that front when it comes to that insurance major. Shail, when it comes to some of the other pockets that Dharmesh mentioned, for instance, defense, we didn't see too much of a fillip post Putin's visit, unlike what was anticipated. Neither have we really seen any fillip post the RBI commentary. Now we're waiting for the Fed. So markets are clearly at the moment just waiting water.
Abha, to be very honest, everything has been now done. You've had a rate cut which nobody was expecting. 0.25% borrowing costs have been brought down. You've had a strong GDP number that came last Friday, and nothing has happened. So now one must accept that there is something in the market which we don't know is coming, and smart investors are selling ahead of that. If you look at the advanced decline ratio when it comes to the NSE 500, only 87 stocks are in the green, 400 are in the red. For the moment, 25,800 has held, but if you look at the pain in the mid cap space and the small cap space, it believes the the sentiment that is there. and this is when 29,000 crore rupees is coming every month in SIPs, most of it going to mid caps and small caps. So retail is buying when smart guys are selling out. That's the broader structure of the market. There's no point taking a buy call. It's just pain all around.
Okay. Looking fairly painful. And Dharmesh, you know, it's December, and at this time of year, we don't really see any kind of accelerated, FI buying either, as things quieten down for the year end. So apart from the Fed commentary, which is largely factored in, what is the level of pain that you expect to continue here, and what should retail investors be doing at this point?
Oh, I'm really sorry. I'm unable to hear what you are saying. I mean, the line is very, very scratchy.
All right, let's correct that. Let's give it a moment and just fix the line with Dharmesh, and we'll come back to him. But Shail, the Fed meet, again, like you said, with all the major triggers having sort of moved past them with no major reaction, would the Fed rate cut as it's been anticipated also already be factored in largely?
Abha, to be very honest, we don't know what is in the pipeline as far as Indian markets are concerned, but I can tell you the pain is immense. We've seen a record high on the Nifty a couple of days ago, yet mid caps and small caps in the portfolio of retail investors are at a lower level when the Nifty was 24,500. So the pain is in mids and smalls. You know, how many of retail investors hold Bharti Airtel, M&M, Muthoot Finance, stocks that are hitting record highs? Barely a few. All of us and all of them are invested in mid caps and small caps. They are showing no signs of rising. In fact, the small cap index has broken below 365-day EMA, which is very, very difficult to overcome. Now we are waiting for the April low of 2025 to be tested. Let us hope it is not tested.
All right, so clearly the focus is, as Shail said, moving to the broader markets. And I think it's about time, Shail, also, because remember when we were hitting those new highs on the index, a lot of investors were already speaking up and saying, but we haven't really been able to participate in those gains. Talking about the broader markets, Keynes Tech, and we know, of course, of the kind of dismal selling that counter saw. The worst week since listing, in fact, and this is a small error on its subsidiary. The management has acknowledged that there was a mistake of not mentioning in the notes to accounts related party disclosures, which will be corrected now, and they will be taking measures to restore investor confidence. Macquarie has actually said they see 100% upside on the stock. So Keynes Tech down about 12% just on Monday, 27% this week, but taking measures to restore investor confidence and still seeing some strong brokerage views coming in on that counter. That's the news on that one. Let's also take a look at what else is moving in the broader markets and pull up some of those mid caps and small caps for you. Just see where some of the action is. I'm just putting up my screen as well. We do have, a few names that are seeing some gains, but the gains are limited. Today, it's clearly a day for selling. Remember, it's expiry day as well. So there's pretty much a lot of traction, largely on the downside. We're not even seeing our favorites, whether it's auto, metals, none of those counters either that are seeing any kind of participation in the markets today. Fertilizers, let's pull up rice stocks on Trump's commentary, see where that's taking them, given the kind of complaints that have come in from the agri body in the US, and see what's happening there. We've got Coforge down 3%, PVR Inox down about 3%, paint stocks are down today. So some of these names are also not looking so great. Pharma's not participating either. So it's really just looking weak all around. There's Coforge for you, just about negating any of the gains that it might have seen last week when we did see a slight bump up coming in on IT. Shail, what else are you spotting?
Well, I'm praying that the bulls are able to hold 25,800 on the Nifty. If it goes below, then of course 25,620 is what we are looking to be tested in this week itself. Lots of breakdowns happening across the board. If you look at the kind of selling pressure that's coming into FNO, this is where people use leverage to make supernormal money on the long and the short side as well. In terms of top losers, you have Coforge. You know, this is a strong stock, 3.5% lower. Asian Paints losing 3.5%. Mazgaon, you were talking about defense. This is a third top loser, 2.5% down. National Aluminium slipping 2.2%. And remember, this is the first 10-15 minutes of the trade. If you see this kind of selling pressure at start, you can well imagine on the weekly expiry what lies ahead. Abha. So 25,800 will go. That's my feeling.
All right. I'm taking a look. Minda Corp is down 3%. Endurance Tech, MRPL, Nalco, some of these Shell also just mentioned as well. A whole host of stocks that are just looking extremely weak. We've got Dharmesh down with us as well. Dharmesh, talking about the broader markets and the concerns over there, you know, what advice would you give to a retail investor who's kind of stuck at the moment? Because clearly, you know, Shell is saying no buy calls right now at all. The broader markets are suffering. We're seeing massive cuts on the mid-cap and small-cap index today.
Yeah, well, I think the line went scratchy in between, but what I can gather is that retail investors, what they should do in this kind of a market. So, Abha, if you look at last 1.5 years, the market has been about retail investors. Either they have been directly through the trading part or the demat accounts, or it has been through the mutual fund accounts. Those are also retail investors' money which are being pumped into the market. I will just highlight one line of a caution here, like GDP and everything. So GDP growth was not great. It was 8.7% on the nominal front, and nominal GDP is what goes into the making of corporate, balance sheets, P&L, top line and bottom line. So there has been a concern. If you look at GST number for the month of October, it came at only 0.7% kind of a growth. In light of all the GST cut, this growth should have been higher. So the point was, after pent-up demand, whether there is a continuity of demand or not. So that is not there in the market. If you look at, industrial production, it came at 0.4%. And factory output was 0.37% for the month of October. And likely, the RBI did, obliged with the rate cut, and expectation is one more should come. So in this kind of an environment, stick to themes which have a actual decent trajectory of growth. And that's the reason why I said banking space still looks better off, and defense still looks better off, metal still looks better off, because there the earnings traction would be there. But coming to mid and small cap and high value PE multiple, one thumb rule can be anything which is 70-80% kind of 70-80 times PE multiple. You look at the growth trajectory. If it is less than 25%, avoid them. Asian Paint, for the case in point, it did have a trading rally built up out there. But again, it's a 15 to 12% kind of a growth CAGR. But the valuation multiples are higher of 50 PE multiples, and it's a product commodity. It's a commodity business. So, avoid them, be selective. But that is what I can advise to investors as of now.
It's really important to get some of those insights. Dharmesh, thank you so much for joining us this morning, and we hope to, of course, chat more with you next week. Virat Kohli has bowled a big bet on homegrown sportswear. The former captain of the Indian cricket team is investing 40 crores in Agilitas Sports. As part of the deal, the company will acquire 1/8, the sportswear label co-created by Kohli, and reposition it as a high-performance Indian sports brand aimed at global markets. Kohli, who ended his endorsement deal with Puma in April, now comes on board Agilitas not just as a brand face, but an investor and co-founder of 1/8. The company plans to take on global biggies across footwear, apparel, accessories, and sporting goods, spanning multiple sports rather than just one category.